Dogs of the Dow, dollar cost averaging, and Robinhood challenge. Boy, do I have a video for you. Alright guys, if you're new here to the channel, you don't really know what it's about, I talk about all things investing with my tips, tricks, and insight into the stock market. So if that's something that interests you and you're looking to increase the size of your portfolio, make sure you quit, jump down, hit that subscribe button, and turn on the bell notification so you can be alerted when new content comes out. I post a ton of different content that you're definitely not going to want to miss. Now in this video, like I said, I want to cover the Robinhood challenge, my moves this past week, but I also want to answer a couple questions that were asked. Now first, in the comment section of one of my most recent videos, Isaiah Sherwood said, go into detail explaining what the numbers for PE ratio mean and then how to pick the right companies to invest in. So a lot of it is your own research. You know, I can present all this information for you guys, but you just definitely want to make sure you do your own research. But sure, I can certainly go into talking about my stock picks, why I'm choosing my stocks, and then also some of the definitions of different investing terms. Now, you might want to check out the investor series that I threw together. It's really short. I plan to add more videos to it, but basically it's trying to take down the daunting task of investing, make it easier for everybody. So whether you're a beginning investor or you just want to brush up on some of those beginner terms, you can just go right into that playlist. So first, let's just cover what the PE ratio is. Now, by definition, this is price to earnings ratio. And look at it this way. Essentially, if you have a PE ratio that is given to you, then that is the dollar value that you have to put into the company to expect to get a dollar back. So if you have a PE ratio of something like 28.12, then you can expect to have to put in $28.12 to get a dollar in return. Now, people commonly think, all right, so this means that if you have a low PE, that the stock is definitely undervalued, and if you have a high PE, it's way overvalued, you shouldn't buy them. Now, that's not necessarily the case, although it is a decent indicator on if the stock is below or above the price that it should be selling at. But keep in mind that a lot of times these companies with high PEs are companies that have been evaluated for the future. Although they might not be giving you that return right now, a lot of people invest for the way out future, so they're okay with paying that much money because they're just a much longer term investor who's already taken this into account. So you can get tripped up if you always think that the lower the PE is, the better, but in layman's term, a lot of times it does mean that it's a better choice. So that's one way to look at it. When you're looking at PE, definitely take it as an indicator and a step to look at when you're researching, but you're gonna wanna take into a ton of different things when you're looking at different stocks. You wanna make sure you're doing a bunch of research and not just looking at one specific category. Other categories I like to look at is the market capitalization, you know, how big the company is, how much revenue they generate, how much sales, profits, all of the different financials that you want to look into. Basically, there's so much that goes into it, and I can make a separate video about exactly how I identify some stocks, but I'll link a couple different videos to this that just talk to some of those points that I cover. So anyways, thank you for that question. I hope that I answered it. If you do have more questions regarding that, make sure you leave it in the comment section below. And if you do have any questions at any time, no matter who you are watching this video, I'll make it my mission to answer that question for you, whether it's in the comment section or in a video. So thank you for that question. And without further ado, let's hop right into the Robinhood app because I have some things to cover for this week, and it's actually kind of interesting. So I decided to switch up my strategy a little bit. I mean, it's still investing in a lot of those same companies, but it's a new strategy that I wanted to just talk about on the channel, introduce. If you didn't know about it, that's fine. If you know about it already, which many of you probably do, then let me know if you've ever done this strategy, and that is the dogs of the Dow. But before I do get into that, let's cover my moves this week for the stock market, and I'll talk about it alongside. So you can see over the past day, we didn't really do much today. We made a couple cents, but it was relatively just stabilized for the day on my portfolio. If you look at the past week, you can see that we've gone up $20.29. The past month, we're up $52.50, and 3 months we've been doing this Robinhood challenge a little bit over 3 months, $137.40. Now, if you are unfamiliar with the Robinhood challenge, essentially what it is I incrementally invest $100 each week, and I'm trying to just grow my portfolio as big as I possibly can to be able to one day maybe retire and get this passive income from my portfolio and not have to worry about money. So that is the long-term goal. Obviously, this is a very, very long-term portfolio goal for me, and I have a lot of time, seeing as I'm 23 years old and just basically will be investing throughout my life. So if I go right into the history, you can see that I've started to get these dividends rolling in. They call it a dividend snowball, and that's what I'm starting to accumulate right here. So you can see that I'm getting $1.02 from PSEC. I'm getting 34 cents from Schwab. I'll be getting $1.02 from Citigroup, and then Pfizer is going to be paying me 72 cents. So it is interesting because Robinhood doesn't really take these into account too well. So you can see I have a lot of different dividends, Realty Income there, AOS. I have a lot of different dividends that have been paying me, and that isn't actually in account for my percentage return here. So nearly 6% over the past 3 months, but actually it doesn't really take into account those dividend yield payments that I've been receiving. So that's really interesting. Now, going over my moves, I decided to do a little bit of the dogs of the Dow strategy. If you don't know what the dogs of the Dow is, basically, you look at the Dow Jones Industrial Average, the DJIA, and you take the top 10 highest paying dividend yield companies, and that's what you invest in. You're supposed to do it at the beginning of the year, start your investments and disperse them through those 10 throughout the year. I'm doing it at the tail end of 2019, and they are readjusted every single year. So these might not be the dogs of the Dow next year. Likely a lot of them won't be because they have gone up in price and their dividend yield has decreased. But essentially, these are two that were on the list. So Coca-Cola was one of them. Coca-Cola was one that I had previously invested in as well. So you can see that I have 6 shares now at an average cost of $53.62. My total equity is $318, and this makes up nearly 13% of my portfolio. So a relatively high percentage. I think it's the second highest in my portfolio behind Realty Income. Looking at the PE ratio, just because I had touched upon that before. So the PE ratio for Coca-Cola on the Robinhood app is 29.34. This might not be the real PE ratio because sometimes Robinhood is a little bit behind. They don't really get it too accurate. So definitely look these up online. Yahoo Finance is a great spot to be doing that. So keep that in mind when you're looking at these stocks. But that PE ratio of $29.34 basically means that every $29.34 that I invest in this company, that's when I'm going to be getting $1 back in those returns. Now, hopping down a little bit, this was my second move. Now, I invested in Pfizer. Pfizer is a relatively good company here. You can see that they were on the decline for a while, and now I think they hit this bounce and we're going to be able to do pretty well. So they are up 1.39% for me. Obviously lost me 4 cents today. Not going to lose sleep over that. Not really a big deal. 5 shares of them at an average cost of $36.71. Now, this is a company where they have a lower PE ratio than Coca-Cola. So their PE ratio is 13.03. So that's what I can expect to be investing to get my dollar back. And that's pretty interesting because it is significantly lower. This is really low. And this is, yes, it is part of the dogs of the Dow. So that's what I wanted to do. Basically, dollar cost my way in a little bit more, and that's exactly what I did for this week. Now, those were surprisingly the only 2 moves that I did make, but you can see that if you look at my buying power here, I have about $30 left. Now, what I'm planning to do, I actually wanted to invest more into HPQ. So HPQ was one that I invested in relatively recently. You can see I'm up 13.4% on them, and that's off of news of an acquisition. Now, another company, Xerox, came in, made a bid. I think it was accepted, and then it ended up falling through last minute. So all of this was just off of speculation of them being acquired. But now there's a lot of news of different companies offering to buy out HPQ. So it'll be interesting to see where this stock heads in the near term. I didn't want to pick up a share today because I really don't know, because after this news, I would expect it to drop a little bit unless a company can confirm that it's buying out HPQ, which no one's really, I think it's going to take a much longer period of time to go over that because all of this seemed like it was pretty far along and then all came crashing down. So what I plan to do is just hold on to that extra little bit of cash for next week so I can invest that unless something else comes up that I want to invest in this week, in which case I'll let you guys know. But anyways, I hope you guys did enjoy this video. Make sure that you drop a like if you did, and then make sure you subscribe to the channel. You'll get a ton of content just like this. And thanks for checking out the video, guys. Have a great day.